Hey, this is Keith Weinhold from the Get Rich Education Podcast. You are listening to my friend John Larson in the Real Estate Cowboys. Don't quit your daydream.
Hey everybody, it's Robert Helms, host of the Real Estate Guys radio show, and you are listening to the Real Estate Cowboys.
Have you thought about becoming financially free through real estate investing, but don't have the time or knowledge to get started? Welcome to the Real Estate Cowboys podcast. Each week, we discuss passive income investment opportunities in the red-hot Texas market. John Larson and the Real Estate Cowboys will show you how to leverage their team to build wealth in real estate through passive investment opportunities. And now, here's John.
Hello, everyone. This is your host, John Larson. Welcome to another episode of the Real Estate Cowboys podcast. This week, we are talking about borrowing money to invest in real estate. And is it worth it? I believe it is. Many of my other friends in the real estate investment world believe it is. Keith Weinhold of Get Rich Education is really big, using debt, good debt, to invest in, properties that generate income for you. And he'll tell you that financially free beats debt free every time. And I'm a firm believer in that as well. Dave Ramsey, who's very much against debt, to the point where he has no debt, to where he doesn't even have a FICO score, is on the other end of the spectrum. And I don't really agree with everything that Dave Ramsey says. I will say that I used some of his practices to help pay down my own debt, but I'm fine with debt. I believe that there's good debt and bad debt. And if you have good debt, you're good. And so, like I said, not all debt is bad if leveraged properly. And so a good example that Keith has given before is, why would you pay off your car loan or your personal residence when it's at a 4% rate? Instead, you could have the opportunity to invest those dollars into something that produces an income stream, perhaps paying you 9%. And when you borrow at a lower rate to invest in something that produces a higher rate, the difference is an arbitrage. You also want to remember, you want to invest in something that pays you income every month, like a rental property or become a private lender, which are two solutions that we offer at American Real Estate Investments and the Real Estate Cowboys. You will see, if you invest in the stock market, if you get a 9% capital return from stocks, you aren't paid that until you sell. And obviously, the stock market just fluctuates so much. So today's 9% return could be tomorrow's negative 9%. That's one of the reasons why I really am not as much involved in the stock market. I do know people that make a lot of money in the stock market, but they are watching it on a daily basis, where I'm looking for more passive opportunities because I just have so much going on. I can't really watch the stock market like some people do. And they're buying and selling daily, most of these people. So I'm just not really big on it because of that. Outside of obtaining finance from the big banks out there, like the Fannie Mae, Freddie Macs, or going to a private money lender, which I feel like there's one on every street corner at this point, and rates are going up at this point. The Wall Street Journal prime rate is at 5.5%. Everything that we've been seeing, all the indicators that have been out there have been pointing towards another rate increase here in 2019. More increases to come, which means that the hard money is going to become more expensive as well. What are some other avenues to borrow money to invest in real estate? So not everybody out there is sitting with $50,000, $60,000, $100,000 or more in their bank account to invest in real estate. But there's a lot of financing options out there, which gives people the opportunity who maybe have $10,000, $20,000, $30,000 in their account that they want to invest. There's a lot of options out there where you can kind of get in the game, and a lot of them are leverage options. And so outside, like I said, of the big banks and hard money lenders out there, where rates aren't so attractive, they're not as attractive as they used to be. What are some other ways that you can borrow money to do real estate investments, right? Or become a private money lender, so on and so forth. So when we get back, we're going to take a quick commercial break. When we get back, I want to talk about a few different options that I'm sure some of you know, but maybe some of you don't know. We'll talk about, is it smart to use some of these options to invest in real estate? And does it make sense to borrow money when investing? So stay tuned. We'll be right back after this message.
Looking to complete a 1031 tax-deferred exchange and are needing financing for your replacement properties? Let Graham Parham at Highlands Residential Mortgage guide you through the process and make your 1031 exchange go smoothly and on time. As a seasoned investor, Graham owns several investment properties himself, and he can share with you the best way to plan your exchange. Graduate into a better property or properties and make use of leverage to obtain better cash flow and higher returns on investment. Highlands Residential Mortgage has one of the best in-house loan processes to deliver your loan on time and without any surprises. We are 1031 exchange friendly. Call Graham's toll-free direct number today at 855-326-6802 for your free mortgage consultation, or visit us online at texasinvestorloans.com. Highlands is an equal opportunity lender, NMLS 195724, located 1201 North Central Expressway, Dallas, Texas 75234. Highlands Residential Mortgage, NMLS 134871, is not a financial advisor.
And welcome back from that quick break. This is your host, John Larson. This week we are talking about borrowing money to invest in real estate, and is it worth it? So I want to get into a couple different options out there that not everybody may know about because, so many people have been borrowing money with a 30-year fixed loan through Fannie Mae, and the rates have been really attractive for a long time, but now they're starting to creep up a little bit. And hey, maybe some of you've already maxed out those Fannie Mae loans. Everybody gets up to 10. And now you're looking for some alternative finance options, and maybe you're thinking to yourself, does it make sense to actually, take advantage of some of these other options out there? Or, is it just not a good time for me to buy right now? I'm a little cash strapped and I just don't like these alternative funding options. But maybe you just don't know about these other funding options that are available to you. So that's why we're doing the show this week. Number one would be borrow from a life insurance policy. And not many people know that you can borrow money from your life insurance policy. Whole life insurance policies have cash out values. Some of you probably already know that. But did you know that you can also borrow against your whole life insurance policy at a pretty competitive rate? And so the benefits of this would be, the average rate on a 2-year personal loan is just over 10%. The average interest rate of a credit card is almost 14%. So that right there is it's an alternative source of funding. And if you need a short-term loan, maybe it makes sense at 10%, right? I mean, at this point right now, we're borrowing money from our investors at 10.5%. So this is even slightly more attractive than that. You can repay the life insurance loan on your own schedule. So there's no schedule for repayment. That's one pretty big benefit. You aren't required to repay the loan, but if you don't, the outstanding amount is deducted from the policy's death benefit. So most people are going to want to pay that off. And you don't even have to qualify with a certain credit score. So there's no credits check, anything like that. Whereas you're going to get into that obviously with a Fannie Mae lender, the big banks out there, and a lot of even hard money lenders will require a credit score of some sort. A lot out there that are non-recourse just underwrite the property itself and make sure that it's a good deal for them to loan on, and they want a pretty substantial down payment to grant that financing. Some of them are the recourse lenders are still going to want a credit score. To get a life insurance or borrow from a life insurance policy, you just have to call your insurance representative and tell them that you're interested in borrowing on the policy. And that rep should let you know how much you can borrow and what the terms will be. And you could get the funding very quickly. You can have the money in your bank in as little as a week. So if you need money quickly, if there's a deal out there that you need to jump on, you're just not that liquid at this time, this is an option that you can explore. Another option out there that's pretty popular and has gained popularity is borrow from your 401k. So the IRS allows participants to take out a loan based on the amount in the account. You do not need to apply or qualify for the loan. Loan amounts, repayment periods, and interest rates will vary, so you'll want to speak to your custodian to work out the details. But the rate is typically 1% plus prime. So prime's at 5.5 right now. You could get 6.5 for a loan through the 401k. So not bad. Another option would be a home equity line of credit. And that interest rate, however, is adjustable. It's tied to the prime rate. So you could be paying more or less interest than other loan options. It's really going to depend on what prime is at the time. So it's going to fluctuate. Your HELOC could extend from 5 to 10 years, depending on your needs. One of the benefits is that you don't have to pay interest on any draw you don't take. And so when you take a draw, the clock is going to start ticking. So we've had investors actually do a HELOC and invest in rentals. I've had investors do a HELOC and invest in private lending as well. And so they're taking a little bit of a gamble because the rate could go up and they're on a fixed rate on the private lending side. But typically, I can't see it going up to a point where you're not making any money by leveraging this money. So let's say you borrow the money from the HELOC at 6.5%, and you're being paid from American Real Estate Investments through our private lending model at 10.5%. You're still making 4% on your money, which is pretty good. That's very passive, right? And a fixed amount. But if that HELOC, if the rate goes up, the Wall Street Journal prime rate goes up, you're only making 10.5% on the money. So if it goes up a point, you're now maybe only making 3%, right? So that's just a little bit of a gamble that you're taking. But the home equity line of credit or HELOC rate as of January 11th of this year, the average is 5.73%. That has been the average out there. So another thing you could do is you could take out a home equity loan. Now with the home equity loan, it's a straight loan against the equity in your home. Okay, so it's going to be a fixed rate. You also do not need to qualify with a credit score. With this type of loan, you're going to get a lump sum that you can use to do real estate investments or anything else that you want to invest in. You'll have fixed payments over time with a fixed interest rate, and your repayment term could be up to 30 years since a home equity loan is essentially a second mortgage. I see a lot that are like 20-year terms, but you could probably get up to a 30-year term on a home equity loan. We have a lot of investors that do that as well. At this point in the market, there's a lot of investors that are sitting on quite a bit of equity. A lot of investors I know out of California that are sitting on a lot of equity in their home. They don't want to sell, but they'd like to release some of that equity. And the only way you can make equity tangible is by doing something like this, a home equity loan, or my next option, sell, or next option would be a cash out refinance on your home. So if you've owned your home for a long time, you could do a cash out refinance. This isn't technically a loan because you don't have to repay the money, but assuming you have enough equity, you can refinance for a larger amount than your original mortgage. You then will have a brand new mortgage with new terms. Typically, you want this at a lower interest rate, right? It needs to make sense than when you originally made your purchase. And you get the extra money in cash, which gives you the opportunity to invest in real estate. So this has been a very popular one too with my investors. A lot of my investors have done cash out refis, bought more property. They've leveraged their own rental properties that they currently had that were sitting on quite a bit of equity, and they wanted to make that equity tangible because equity, it's kind of like the stock market. Until you buy or sell, right? Until you sell or do a refi, that equity is just kind of sitting there. It's just kind of fairy dust, right? You need to make it tangible. You need to put money in your hand, and then you can go do other things with it. I definitely recommend taking it and investing, though, into other real estate properties. So I've had investors, that had 5 rental properties that all appreciated. Some guys here in the Texas market, all of them appreciated probably an average of $30,000, $40,000. They did some refinances on those properties, took that money out, and then now they had new down payments to go buy new properties. And they essentially just doubled their portfolio by just doing a cash out refinance on the 5 homes that they owned. Really, really good option out there if you're sitting on some equity. And like I said, I think I've talked about this on the show before, it's a good time to do a cash out refinance right now because I do feel like there's some volatility in the market where we could be going on a downward trend and some property values are going to start dropping again. So you want to take advantage of this when it's at the height of the market. We're still at that height, although we have seen some correction in certain areas around the country and even certain neighborhoods, right? Some of the higher price point neighborhoods have slowed down a little bit. Days on market have increased. Months of available inventory has increased. We'll see how this summer goes, but I definitely think there's going to be a little bit of a slowdown because of the rising rates. I've already been speaking to mortgage officers out there, loan officers out there, mortgage brokers have been saying less and less new applications have been coming in lately. So that's a sign that there's not as many buyers out there, but it could also be the time of year. But I do think with the rising rates, you're going to see a cool down in the market for sure. So those of you who are listening that have some equity in their home and would like to do possible HELOC or a home equity loan or a cash out refi, I think that this is the time to do that. I think that there's some good options out there for you to put that money to work for you. I'm still taking a wait and see approach on the rental market. I do think with the decrease in buyers coming into 2019 is going to result in more renters, which is good for all of us property owners that own property now. If you're just trying to get into the game, I would kind of wait and see how things are going to transpire here because like I said, you're not getting as attractive finance from Fannie Mae as you were in most recent years. Let's take a wait and see approach. Let's see some prices start to come down in some of these markets, even some certain areas of Dallas where some prices ran a little too high, I think are starting to correct a little bit. So more opportunities are going to start opening up. And like I said, I think the opportunity to keep properties leased and get them leased quickly, that's going to increase greatly because of the fact that I I see it being less and less attractive to buy as the rates are going to continue to go up. So that will cause a little bit of a cool down. But like I said, if you're sitting on a property right now that has equity in it, I would definitely look for some ways to unlock that equity and get it to work for you and some other options out there. Another option that you have, which most people probably don't want to go this route, but you could borrow from a friend or a family member. You could have some friends and family out there that have quite a bit of money that would love to put that money to work for you in a kind of private money lending fashion. What I would recommend is that you should put a formal arrangement in place and something written and signed with repayment terms, because no borrowing is worth risking, a relationship over. But if you have family members who are interested in funding your real estate venture, a contracted loan might be something to consider. I know a lot of people that have gotten their start in real estate or started their business from a loan from a family member. So I wouldn't completely rule it out. Some of our family members out there have quite a bit of money. They could help us get started on funding opportunities for us. So that's what I have on borrowing money. Do I think it's smart to borrow money in real estate? Absolutely. Real estate provides some of the best opportunities out there for leveraging. Fannie Mae in itself, 30 years with only 20% down, 30-year fixed rate is some of the best financing you can get in the entire world. And it's been great of late because the rate's been so low. The rate's creeping up a little bit, which is scaring some people, although it shouldn't really, because history has shown us anything below 7% is still a solid rate. I know on the investor side, investors are looking at 6 and 6 and a quarter to borrow money from Fannie Mae is kind of high. And I think the reason that they believe that it's high is because the prices have gone up so much, because we've been in such a healthy market for so long. But, coming out of a recession where property values are still very affordable and your rent to price point ratios are still very much intact and very close to that 1%, price point to rent amount, a 6% rate wouldn't really have much effect on the cash flow that you could get from the property and the rate of return on cash flow. But because we've been in such a healthy market for so long and the inventory's been so low for so long, it's caused prices to really rapidly increase to where now the cap rates aren't very attractive. And when you add in the rising rate, you're really, really constricting that return on cash flow, and it's really becoming compressed. So I understand where investors are looking to kind of wait and see, trying to see some pricing come back down. I don't think the rate is going to come down. I think the prices are going to come back down before the rate comes back down. That should then shake loose some more opportunities in the market for solid rentals that are not just good cash flow opportunities, but very safe opportunities, good neighborhoods, good exit strategies, good tenants. That's what we're looking for. That's what I'm looking for as an investor, because a passive experience is so important to me. Cash flow is great, but the passive model is very important. I don't have a lot of extra time in my day to deal with a bunch of crap. Tenants not paying, bunch of maintenance on my property getting broken into. I don't have extra time in my day to deal with things like that. So I really, really like to focus on very truly passive investment opportunities. And that's why I love our private lending model, because you just loan some money and you get a fixed payment each month. And there's not a lot of babysitting and watching, and it's not there. And investing in the right rentals, right? And I really only like to invest, I say this all the time, high B to A class properties. And guess what? High B to A class properties have not been spinning off the most attractive returns of late. So that's why I've kind of slowed down on buying rentals at this point, because it's become very hard for me in Dallas to find good opportunities in neighborhoods I'm comfortable with that actually spin off a solid rate of return. There's still opportunities to see equity growth in a lot of these areas of Dallas, but also the volatility of the market coming into the market here in 2019. The buying pattern is slowing down. I'm talking to real estate agents and they're telling me that the days on market are coming up to 2 months. We haven't really seen that of late. So that just makes me want to take a wait and see. And that'd be my advice to you listening. Just a little bit of a wait and see here to see if the real estate market really starts to pick up again in a lot of these areas across the U.S. here in the spring. I'm kind of forecasting that it's not. I think we're definitely going to see a slowdown this year. But like I said, those of us that own rentals already, I think that the rental market is really, really going to pick up here in 2019. Whereas there were so many people buying over the past few years, in recent years, a lot of buyers out there. I think that you're going to start to see a lot more renters hit the market, which is good for us. That means we can start pushing up rents in certain areas. That means that we can keep our properties leased for longer terms, less turnover. So that's something that I'm optimistic about. If you like what you heard on the show this week and are interested in obtaining some finance for your first real estate deal, you can reach out to us, myself and my knowledgeable team here at the Real Estate Cowboys. We have a lot of relationships with lenders around the country. So if you're looking for finance, we could help you. If you're looking to become a lender, we can help you. If you like that idea of being the bank and holding first lien position on an asset in a market like Dallas here, and earn double-digit returns on your money fixed, reach out to us, realestatecowboysdfw.com, areiusa.com. Just put your information in and a member of my team will reach out. Or, hey, if you're somebody that's doing a HELOC or you're doing a cash out refi and you want to put that money into some single family homes and take advantage of the tax benefits that are available to you as well, coming into this new year, 2019, we can also assist you with that. And I can give you some, offline advice on markets that I'm really looking at and markets that I'm kind of cooling on. But if you listened to last week's episode, you saw PricewaterhouseCoopers just put out their report for their market trends for 2019, and DFW is number one on their list for markets to be looking out for to invest in, and was not surprised to see that. So like I said, if you like what you heard on this week's episode, go back. We have plenty of episodes from this past year that you can re-listen to either through iTunes or on our website, realestatecowboysdfw.com. All of the past episodes are housed there. Go back and take a listen. And like I said, if you're ready to take action, if you feel like 2019 is your year, you want to get into some of the great opportunities that we have and the great markets that we're working in, we can help you. That's what we do. We build passive income streams for investors. Also, if you haven't yet, check out my book, The Passive Income Guide. If you kind of like to digest all the information that we talk about here on the Real Estate Cowboys in a quick and easy read, go to the website, realestatecowboysdfw.com. You can buy the book there. You can buy it on areiusa.com. You can buy it off Amazon. It's called The Passive Income Guide, What is Your Return on Life? And that is by me, John Larson. Thanks again for tuning in. I will see y'all next week. And always remember, what's your return on life? This is John Larson signing off. Have a great week, everyone.
All opinions expressed by the hosts of the show are the opinions of American Real Estate Investments, LLC, and do not reflect the opinions of guests or sponsors. No personal or professional advice heard on this program should be considered an endorsement to follow a real estate financing or investment strategy. Before acting on any information, seek advice from your financial, tax, mortgage, or real estate advisor, as the information is not guaranteed and investment strategies have the potential for profit or loss.